Yeah, I'm not as worried about the Omicron at this point. I think the market's overreacted a few weeks ago when it was first when the first cases came out of South Africa, and I think the governments were tending or at least threatening shutdowns, especially in the U.S. and the market overreacted, and I think these are buying opportunities. So I think I'm not worried about the next few weeks. I think that, given that the case rates are very high, but hospitalizations and fatalities are not coming in like they did with Delta in the prior year. So I'm not really worried about that. I think and again, if anything, it's a buying opportunity on dips.
Greg, we've had to deal with so many unknowns over the course of the pandemic. I mean, COVID's thrown so many twists and turns at us. But if I look at your research and some of your commentary into 2022, it's more of a known that we seem to be concerned about here. You're worried about a policy mistake by the Fed. That's
right. Yeah, and I think you can expect, the Fed to, obviously they've changed their tone, but I think if it might be too little, too late. And I think, even with the tapering, the reduction in the bond purchases, as well as the market pricing 3 hikes next year. So even with 3 25 basis point hikes, it's still pretty dramatically negative real rates. And I think you could say the same for the ECB. So yeah, I'm worried about the potential policy mistake. The market seems to have priced in perfection from the Fed and has sort of shrugged off the recent change in tone. But a change in tone is one thing, and the market's handled that. But the change in direction, which could happen if you have inflation numbers really persistent going into 2022, that's what I worry about. I think that's the real risk in the market.
Greg, I want to get into your advice then as to how to navigate 2022. And you say keep an eye on inflation, but you also say be long gold, Bitcoin, banks, commodities. I want to get into those areas because gold has not been a great trade in 2021. Why is next year different for gold?
Yeah, I don't know that it's going to bounce back robustly. It's more of a long-term, inflation hedge, and that's been the case historically. But yeah, it was a disappointment in 2021. I think it's the worst year since 2015. But I think with inflationary pressures, it might be good to have some allocation to gold or Bitcoin, the digital gold, as a long-term inflation hedge. Granted, Bitcoin has traded much more like a risk asset in the last year. But I think, looking ahead, you have to consider inflation as a risk. That's why I like cyclicals, with exposure to commodities, as well as banks, which will do well in a higher interest rate environment. So I'm just, suggesting that investors position themselves for the inflation risk as well as for higher interest rates.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.